Welcome to Stox Shala YouTube channel. Um, we'll be learning stock market trading today. We'll be discussing in this video what is stock market trading is, why trading is not gambling, skills required to succeed as a trader. So we'll be learning all these three topics mainly: what is stock market trading, why trading is not a gambling, skills required to succeed as a trader. Will be learn one by one. Let's go into the our first topic, that is introduction. Many people think stock market trading is a gambling. Why? Because why people will always think trading is a gambling? Because most of the people will lose the money and some people will make profit. That's why the randomness of making profit and losing the money, people always think it has a gambling. But why they are thinking this is the one reason? Let's understand the real truth. Why it is, why people are thinking it has a gambling. But gambling is based on luck, correct, right? So we don't know when we'll get a profit, when we will win the game, when you will lose the game, correct, right? It's like a gambling, and it's purely depends on luck. Risk will not be in our control, so will not be in our control when we will be losing or when we will be winning, correct, right? It's like betting, like which game, which IPL match it is going to win. It's 95%, 98% the data it will show. We don't know which team it is going to win. It's always the probability. When it comes to the probability, it's it's tossing the coin. Tossing the coin means what? It is the probability. There are only two phases, that is there are only two phases, right? The probability is 50-50, correct, right? When it comes to the winning the game, it's not the winning or losing the game. It depends upon the 11 peoples of one side and depends upon the 11 peoples other side. So the probability is always very less. That's why, so gambling, it's always will be losing our money long term. So there is no data or logic to guess, correct, right? When it comes to the gambling, there's no data or logic with whether we'll be winning or losing. So long term always it will be in loss. Skill does not matter for gambling, it's always the luck, correct, right? So when it comes to, let's learn about the trading. So stock market trading, it's always based on the analyzation. So always we'll be analyzing our trade, trades. Why? Because we'll be having the data, we'll be having the charts, whether it is going up or it is going down. So the fundamental of the stocks it will talk, correct, right? We'll be first we'll looking into the fundamentals of the stocks. We'll be speaking about those all things in our upcoming videos, or upcoming our in our Stox Shala or channels. I'll be posting how to check the fundamentals of the stocks, so that you can easily identify the fundamentals of the stocks. but now let's be clear. We'll be looking into those all fundamentals of the stocks, and we'll be analyzing the stocks. And risk always it is be managed. Why? Because how it is managed means we can put the stop loss. We can, whenever you buy the stocks, we can add the stop loss, or we can put the for profit also. When the price, if it comes, we can put it that for the stops exit, correct, right? We can put it for the stop loss, or we can do that, we can manage it, correct, right? So that's why it is risk always it is managed in the stock market trading. Long term always it is in the wealth creation. If you purchase with the good fundamentals using the charts, always it is long term it is a wealth creation. So only thing is we need to be look into the charts and fundamentals of the stocks. Skills always if your skills improves, the result also it will be improves in the stock market. But when it comes to the gambling, it is always reverse. It is not in your, there's no skills, there's no data there is no logic, so you'll always be will be losing in the gambling. But stock market is not like that. It's if you improve the knowledge on the stock market, it's a good. If there is no knowledge, if there is no market analysis and all, obviously it feels like it's a gambling stock market. Why? Because you will be entering into the unknown stocks, so you'll enter it and will be it is after some years or after some months it will be delisted and you will feel like always it is a gambling. Correct, right? So make sure always you study about the charts, fundamentals, analyze it, and consult your stock market advisors or your CA and everyone, so that will be well managed. Let's go ahead into our next topic. What is the stock market? What is that stock market trading is? Well, stock market trading is whenever buying and selling the company shares. We'll buy the company shares, and after certain from price, if it reaches from the for the profit, we'll be selling that company. Correct, right? We'll selling that shares. So the goal is always to earn the profit from the share movement or price movement. Correct, right? Whenever if it goes the price up, you will book it for the profit. That is our main goal. Correct, right? So based on the analysis data and strategy, we'll be entering into the that share, that stock for the that price, and after that some certain due to the our analysis or strategies, we will be putting the our margin of profit and will come out from that stock. That's what it is trading. Correct, right? So let's go ahead into our next topic, that is when to buy a share. So when you will buy a share, you will become a partial owner of the company. Correct, right? So it's like there is a one company, and if it has 100 shares, if you are purchased 1 or 10 shares in that, you are the 10. If you purchase 10 shares, you are the 10% owner of that company. It's like that. So it's you will be the why you will be owner of that company, because assume that you have one land. If the land is it belongs to the 10 peoples, and you are also one of that 10 peoples, means you are also the owner of that land, right? It's like that. So the when your money always helps the company to grow. Correct, right? If you purchase the shares, it will always help the company to grow. You earn the price whenever the price is goes up, or the company always, if it makes profit, the company will yearly or monthly, I mean some quarterly, they will give a dividends. So you may earn from that also, the that whatever the dividend money they will give, we will be earning from that also. Like Vedanta or so many other companies, they will be giving yearly or quarterly the dividends, so we will be earning the dividends from that share. Correct, right? So it's like that. I will be deeply explaining about the what and all the dividend stocks and how they are giving, how much percentage they are giving. I will be explaining in our future YouTube videos. So yeah, let's go ahead. What types of trading? What and all the types of trading is intraday trading, short term trading, on long term trading. So you all know what is intraday trading. Same day you can buy it, and the same day you can sell it. So the moment you the trading day, it will start from 9:15. Actually it is 9 o'clock or some other, it will start 9 o'clock 7 minutes, it will be the window, it will open. After that 9:15, the real trading it will be start. Correct, right? So the moment you enter, after that in the same day you need to sell it. If you are not selling, our platform, whatever the platform you will be using it for the your trading, right, it will be taking it in the same day and it will be sell it. I will be speaking about those all things, how it is doing and all those things what the terminals they will call it, and how much they will charge each platform and all. We'll be speaking what is the intraday, for intraday which platform it is good and all those things. So what is short term trading? When you buy the shares, you may sell it for the after days or weeks. Those will be calling it as a intraday short term trading, or maybe swing trading, correct, right? So long term investment, always it is when you buy a shares, you will be selling it after certain years. So that's what we'll be calling it as a long term investing. So I will be speaking, we'll speak about what is long term investing, what is the charges are there for short term trading, what is the charges for intraday, what is the charges. We'll be speaking about those all things our in future videos. Let's tune it, we'll be waiting, we'll speak about those all things. The skills required for the trading. So what and all the skills required for trading? The market knowledge, obviously we'll be needing the market knowledge, will be needing to read about the news, what and all the upcoming the news for the that companies, or you should be up to date to the news. Then only will be knowing about the stocks or whatever it is. To succeed in the trading, the market alone it is not enough. The market knowledge, it's not only the enough. Why? Because you need a trading skills like risk management, how much risk you need to take it, emotional control. So whenever market goes down, emotionally will be feeling, correct, right? Or it may go up suddenly, will be feeling like, should I buy, should I sell, or like that kind of emotional will not be controlled, correct, right? The human behavior is always like that. Discipline and patience. So you should be always be disciplined, and patience. Why? Because whenever if it is going down, you should not, I mean, sometime you should be knowing what is the support level, what is the resistance level, those all things you should be knowing. Depending upon the candlesticks, will be discussing those all things, but will be that's what the discipline and patience you should be knowing when it comes to the trading. The continuous learning, it's also required. Why? Because if you stop learning, will be will not be up to date to the market, right? If you are not reading the news, or if you are not doing anything, then you will not be knowing about anything about the updated, correct, right? You should be always continuous learning, eager to know the about the company, then only you should enter. Okay, so let's go ahead about the next our things. Risk management, how much risk you need to take for trade. So it's always you should take the risk is 1 to 2%, not your 100%. You should always the take risk of 1 to 2%. If it is your risk is 1%, you should expect for 2% of the profit. If your 2% of the risk is, you should always expect for the 4% of the profit, correct, right? If your risk is 10%, it depends upon the people to people. Some people they will be risk is 10%. Assume that the invested 100 rupees, they will be waiting for the 90 rupees, what they will be losing 10 rupees, correct, right? So and they will always, I mean, if it the money, if it becomes 120 rupees, they should come out. That's what the strategies, all these things we'll be teaching those all one by one. But now keep it in simple, always for the risk is 1 to 2% for the trade, correct. Okay, always use a stop loss for the your risk management. Why? Because sometime if it is a support levels, if it is breaks, the company stocks it may go even further down. That's why you always use a stop loss to be protective. Okay, protect your capital first. Keep it in mind, always your capital is your the real money, right? It is your capital. Always you should be protect your capital. You should not wait for the further going down. Why? Because assume that the simple logic, if you invested 100 rupees, what if it is fall for 50%? Okay, you purchased 100 rupees for one stock, that it is you invested 100 rupees. If it is fall for 50%, that is 50 rupees. If it is the today, if you purchase 100 rupees, and tomorrow after 1 week or after 1 month, if it is the price is 50 rupees, you waited for that much, what is your loss is 50%. But when it comes to the recovery of 50 rupees to the 100 rupees, it has to go up 100 rupees, 100%, correct, right? So 50% loss to the, if it is reaches to the your actual value, your actual price, it has to go up for the 100%. That's why always you should protect your capital and reinvest it with the right time and right fundamental stocks. Keep it in mind, that one. And emotional control. Fear causes early exist. Emotional, always you need to control your emotions. Why? Because whenever the price, if it is the whatever the stocks you purchase, if it is going down and down, will be always in the fear, and you will come out early exit. The greed causes over trading. So whenever, if it is today, if you are assume that you entered one stock with 100 rupees, and it is going up to the 50%, and you made a profit of 50 rupees, and you will come up with one more your capital with the 200 rupees or 1000 rupees, correct, right? It's always the greed always causes your over trading. So you'll be over trading, and you may, at the end, you may lose your money. That's why you should not be greedy, and you should not be always fear also whenever if it is going down. So always you should control your emotions. Successful traders controls their emotions. Always whenever the successful traders, they will be not be greedy, and they will not be fear. So it's all, both ways are there. Okay, let's go into the next topic, that is discipline and review. Always you should follow the trading plan. You should have a trading plan, when to enter, when to exit, and these all things you should be with your pen and pencil, pen and paper. You should be drawing those with your candlesticks, when to enter, when to exit, and which stocks to enter, why we need to enter. We should be always maintain those all things. So you should, that's the discipline we need to maintain always. Accept small losses. Why? Because sometime we may need to accept the reality also. Sometime 100% will not be always 100% it will not be achievable. It will happen due to the external factor or internal factor of the India, so it will happen. So always accept the small losses and maintain the trading journey. So you should always maintain your trading journey, and review and improve. Always you should weekly or monthly you should review your stocks and improve your things. So let's go ahead. And conclusion. The conclusion is, stock market trading is not a gambling. The conclusion. So it is a skill based profession. It's treated as a skill based. We have already discussed, right, what and all skills we need to be have for this kind of a trading and all. Treat it as like a business. You treat it as like a business, so that will be much involved, and you will treat it as like your own thing, not the other company's things. So you should always review for the every weekly or monthly, depends upon your availability and your risk and all those things. You should be reviewing those. Okay, learn, practice, and stay disciplined. So always you should be, in order to be in the market, you should always learn, practice. Without practice, it will not come in the overnight. It will not come in 5 minutes or 1 hour. Everything you should be practice for everything, correct, right? In over the night, anybody will not be become a graduate, correct, right? So in order to become a graduate, we have to spend our 21 years as per the government things, like that. Over the night everything, it will not come. So always you should be practice and learn and stay disciplined. Okay, so please subscribe our channel, like this kind of a YouTube. Our videos, it will be coming in upcoming things, and you will be for stock market related what and all will be soon. We will be uploading our all stock market related courses. Will be uploading. It's very worth to watch. So um, keep be patient and stay tuned. Please subscribe to our Stock Shala YouTube channel. Okay, thank you.